If you're asking me, and I suppose you are being on the channel, I don't think this looks like a cycle top. However, there are signs to suggest that the market needs time to slow down. But we're looking at the big picture here, and I want to explain why in this video, why this doesn't look like a cycle top for BTC. Looking across the S&P 500, so using this information right here, also, the US dollar also is continuing to break down, so showing lower and lower prices. And then we're going to layer this with our analysis for the rest of the markets. Now, I've also got altcoins to go through in today's video, with Ethereum having a relatively good day in the last 24 hours, plus the total crypto market caps. So grab your coffees. Let's dive into today's video. After you hit that like button, subscribe to the channel if you're new. It's your home of macro cycle analysis. And for anything that I'm using in the video, you can find the links in the video description. First, I want to start out with the crypto sentiment and the crypto data, just looking at the exchange volume, and then running this along the theory and the headline of today's video, looking at why I don't think this is a cycle top. The 7-day moving average exchange volume has been climbing recently, but of course, just in the last few days has also begun to put in a pullback. Now, we haven't seen this sort of exchange volume data come through at any of the previous cycle peaks. You can go back to April of 2021. You've also got May. Obviously, the volume picked up more because the market began to crash and people are obviously trading a lot more. And then you can see these peaks in October and November of 2021, which were also new all-time highs at that point in time. And then you can fast forward through to March 2024, new all-time highs. You've also got the most recent all-time highs in November, December, and January, of course. So pretty significant market volume there. And then even all the way back to 2017. Now, of course, this one is lower than where we currently are, but you just got to compare that to the times. And the times were much, much quieter then. Obviously, a lot less people trading in the market, and $20 billion average volume for the 7 days was considered extremely high, as you can see, for 2017 into the early part of 2018. So that's the first piece there, just from a broader perspective. It doesn't look like we're at those stages yet. It doesn't mean that we haven't just fizzled out at another barely new all-time high before the market corrects. But just looking at the probabilities, it seems like we have a little further to go before we get all of that extreme interest into the market. Now, this could be winding up similar to what happened around the ETF news back, well, that's Bitcoin ETF launch news back in 2024, January of 2024. You can see the volume did break out of some of the downtrends, but then had another pullback into a higher low. Overall, it was still contained within the previous volume before it broke out into that first big peak of March 2024. So we could be in something similar to that, whereby you're just at the beginning or in the middle of a significant move, and there is still further to go, but you're not in the early stages. So somewhere caught in the middle. Now, the other thing is the liquidation data. We're at 183 million for the day. Typically around these highs, you would see a lot of longs getting liquidated. So you can see these green bars. These are all the longs getting liquidated, and they happen in pretty large sections. For example, you can see December. This was the all-time high that we had, December 2024. Coincidentally, that day at $108,000 came out on the exact same day 7 years prior, when Bitcoin hit $20,000. So the exact same day. Anyway, we've got very significant longs getting liquidated here. So you got 3 days. There's also very significant longs getting liquidated, $1.5 billion. And then as far back as the data goes, 5th of December, that was another very significant day as well. So just within the space of about 2.5 weeks, you had about half of the days above average volume getting liquidated. And then fast forward another month. So this is through to early part of January, mid-January, more mid-January, January 20th and the 27th, obviously the inauguration was here. And then early part of February, when Trump started tweeting, there was a lot of longs getting liquidated, yet the price, so the Bitcoin price, was not going much higher. That's this gold line in the background. So apologies about this big box on the side here. Can't get rid of that. But you get the idea. You can see roughly around the average volume there, a lot of days getting liquidated, yet the price wasn't going any higher. So that's an important one to note, considering where we are now. The price has gone a little higher. At the moment, we've got a couple of days higher. If this was to pick up, meaning you'd have increased exchange volume again to then create extra longs getting liquidated and the price not really going anywhere, then that, in my opinion, is a big cause for concern. Push higher, but just keep getting slammed back down, showing here with the longs getting liquidated, yet the price not going much higher. And we haven't got that yet. Now, the other thing is the search volume for Bitcoin and crypto. This is on a 12-month basis worldwide. It has continued to drop off. Generally, you see these search volume terms really pick up steam as you get to a breakout like we did here. This was November, basically around the election time in the US, and then peak out, start to drop off. And the price still went higher. We know it went higher in December, so that was these points right here. And then again in January when Trump got inaugurated, so through here. But you're still seeing elevated search volume for Bitcoin in particular, but it's beginning to put in lower highs. So there's less and less interest coming in. And at the moment, we're still putting in lower highs, and the market is basically just trading around similar prices to what it has done for the last, well, when you look at the high prices for the last few months, up around $100,000 to $110,000. As for crypto, it's still pretty much a bit of a dead no man's land at the moment. We dropped down to a shorter term time frame. You can see a little bit of a pickup over the last couple of days, which is a good sign for the short-term trends to begin, if they do, begin turning into longer-term trends where we might see further and further upside for the search volume. But as it stands, well, we're still in this trading range, and it looks like the market is trying to consolidate at these prices. As for the 4-year cycle that we are tracking here, we're looking at lows to lows, splitting that down the middle, and the low to the low is roughly 4 years that we're using to give us an idea of a right or a left translated cycle. We are very much in a right translated cycle, and you might recall this if you've been following on the channel for at least, I'd say 12 to 15 months. We were talking about this back in February and March of 2024, when the majority of the market thought we were going to get a left translated cycle, basically topping out in this first half of the 4-year cycle. So there was a lot of, the narrative was very high that we're going to see a left translated cycle and this was going to be all over. And at least here on the channel, we didn't think that was the case based on longer term cycles like we've been seeing with the S&P 500 and the real estate cycle, which I'll look at in just a sec. But here we are in what I'm calling the final boss, the grand final stage. Basically, final boss, to me, from my experience going through this cycle and other markets, when you get to the highs into this later stage of the cycle, so we're definitely not early. This market has been going on for, or at least bull market's been going on for 2.5 years. It is the most difficult. So don't beat yourself up if you're finding it challenging at this stage of the cycle. The easiest times, which is the opposite to what the crowd thinks, what the herd, what retail thinks, the easiest times are the bottoms. I think the hardest times are the tops. That's because there is so much more emotion, and that leads to volatility, and that leads to, which volatility is basically the wild swings up and down, everyone trying to call the end of a move. You know, is this over? Is it not? So this uncertainty around emotions and leading to the volatility is generally around people not having a plan with what they're going to do with their money should the market break down, or if it continues higher and they haven't positioned themselves. Now, if you're just new to the game, check out TIA Crypto. The free report is coming out today. There's a lot here on Bitcoin and how you've got some of the retail accounts talking about a top being in and then showing you this sort of fractal. And we also dive deeper into Bitcoin today, altcoins, you've got ETH here, and then also the real estate cycle. So I'll leave it on here because we'll get to the real estate cycle. Bring it from the long term down to the short term and looking at the fear and greed index. We've just been hovering around greed. So the idea here is that the market has had its move higher and essentially continues to reset. So that's a good thing for the bull market. I don't see anything overheating like we did back in November, December, and then the drop off in market sentiment as it tried to push higher with Trump being inaugurated. That was a very big telltale sign that things were basically drying up. The sentiment died off, price tried to go higher, and it was a fail. So it was basically a news failure. And you guys know, we look at this signal right here. There was 3 bars down, forget the green, lower highs, lower lows, and that said the market was getting tired. And we haven't seen one of those signals yet either. We got very close to one right around the top. There was one day down inside and then another day down, so lower lows, but then this day saved it and we had another higher day. So it doesn't look like the market is getting too tired of this move yet for a longer term pullback like we saw from December into April, or if you want to call it January into April. Either way, it's still a long pullback. So I think we've still got a bit more time here, and that's what the sentiment is showing. Now, I've also got the FOMO Finder, and if you follow Michael's channel, which I'll leave a link to in the video description as well, you can just go down and find Michael's channel right there. Now, for our analysis, we're comparing the FOMO Finder data, looking at the FOMO, greed, you got canary call, balanced, uncertainty, panic, and capitulation, and checking out how that relates to the traditional Bitcoin or crypto fear and greed index. Overall, this one here doesn't spike into capitulation or FOMO as often as the traditional reading, but when you see it occur at the same time, that's usually a stronger signal that you're coming towards some sort of extreme market sentiment, whether it's extreme to the upside or if it's extreme to the downside. So we did see a lot of extreme fear, and then this dropped back into panic for quite a few days. Now, with these readings, nothing is really standing out to say that this has to be a cycle top and the all-time high is in, and that you're going to see some sort of mega collapse like what retail crypto is posting over on Twitter or on YouTube or anything like that. Like, it doesn't seem like this is the case just yet. Of course, can always be wrong. I've got to throw that in. But from my opinion and how I'm trading the market, I don't see this happening yet. We've still got a little while to go. And for the short term, we're still holding above key support levels, 93,000. The previous lows are at about 100, 101,000. But for a shorter term perspective, we're still failed at the moment. As I'm filming this, we're starting to climb the 106,500 level. That was a previous lower swing top. It was a previous higher swing low before it failed. So that's an important point there for the short term, 106,500. Now, the other thing that's going on is this stable coins. They have continued to fall very slowly and still remain in that trading range between 4.8 and about 4.4%. You guys will know that this line right here is the all-time support line. We take it back all the way to 2017, and essentially it's been there to show each of Bitcoin's tops, like significant highs, and had been all-time highs, like the case of April right here in 2021, and then also all-time highs. So we've got significant highs. These were all-time highs at the time, March 24, December and January 24 and 25. And then of course, just now as well, we've got a new all-time high in May, yet it's at a higher low for the USDT dominance, which means there's even less money circulating in the space, which of course has meant that altcoins have been annihilated or just have not gone up as much. Now, there are exceptions, and I'll get to those in just a moment, but essentially this is still in that tricky trading range. Still no breakdown yet for the bulls, still no breakout for the crypto bears to get on their shorts. Now, crypto and Bitcoin don't move on their own. If you're not seeing any sort of signs of strength or risk on appetite in the S&P 500, then it's probably unlikely you're going to see it in altcoins and Bitcoin. And this chart is good news for the bulls overall. The S&P 500 is very much in a bull market, which is why I don't think it looks like a top at the moment. And I don't think you're going to see a top, or this being the top for BTC, when you've got a lot of positive signs here for the S&P 500 to continue higher over the next 12 months. And I'm interested in the longer term here, even though some of the shorter term data also looks relatively healthy, 83% hit rates for 1 month later and 6 months later. after May has been a 5% or greater month. And these are the years here, 1, 2, 3, 4, 5, 6 data points. Not too much, but we're looking back 40 odd years with Mays. So 40 Mays, 6 of them have been 5% or greater. This is what has happened these timeframes after May, 1 month, 3 months, 6 and 12. And 12 looks fantastic for us at this stage. Huge gains, 30% in 85, 17% in 86, 8% in 1990. Remember, there was a recession around this period too. 97, 28%, 2003, 16%. And this came off the back of, nearly 3 years of a bear market, going from the 2000 top down to the, I think it was 2002, 2003 low. And then you had a nice big rally out of that. 12 months later was fantastic. 2009, that was after the GFC, and now 2025, this is after the tariffs. So in almost all of these situations where you had a 5% increase for May, there's been some sort of extreme significant world event. We went through it with this, GFC, post-GFC, post-dot-com bust, recession. These ones here were after the 1980s collapse, 1980, 1981, 92, when it looked like US was going to default to Mexico. So pretty big things. And now we've just seen massive tariffs, which basically crashed the stock markets about 20%, with May now being up 6%. So stats suggest, well, we've got about a almost guarantee we're going to see it higher 12 months later. And so this is the S&P 500. This is the grind that we've been talking about for weeks now. If I turn on my tools and then also the fractal here for the 5 years, turn this on, you can see this red line here. And we've put this on the chart going back to these lows, and this has been the grind phase before we start to push a little higher into June, a pullback, significant pullback there, possibly mid to late June. Then things go sideways again, and then you start to see a bit of a healthier end to the year. So far, this has been working relatively well. Even if it is slightly inverse, you're still seeing the dates they're working out. So basically, correction, it was a move higher, then it was a correction, move higher, and you can see that this has basically been a grind, and that's what the 5-year has suggested. So taking a look at the 20-year as well, that has also suggested a bit of a grind through this period into June. So that's the S&P 500. NASDAQ was looking a little healthier. That's exactly what has been happening. You can see that you've got, even though it's a grind, you can see it's heading slightly higher on the grind, whereas the S&P 500 was a little more flat on the grind. So it's basically very similar to their 5-year patterns. And another reason why I don't think this looks like a top is forming for Bitcoin, even if there is a pullback. You can see that slight weakness in the stock markets as well. And that leads us over to the US dollar. US dollar has still continued with its downtrend. And generally when that happens, Bitcoin continues higher. It's not always going to be an absolute massive boom to the upside, but generally speaking, you see some pretty strong moves. And at the moment, the US dollar is looking relatively weak here, 98.6 on the daily. It has continued to fall overnight, so that was another significant day down of about 0.65%. So yeah, we're basically seeing that weakness continue to flow through for the US dollar. And these are the sort of things that might lead to the end of the cycle being quite difficult for the US. We come back to our 18-year cycle that we'll be talking about in today's reports. There's another quick mention to go and subscribe to that right here. You'll get that this afternoon. We're looking at the winner's curse phase. So we're seeing stock markets up, we're seeing commodities up, we're seeing Bitcoin, which is to a lesser degree in the overall finance space worldwide. And of course, real estate is also up when you look at the national averages. That looks like we're coming to a head possibly sometime in 2026. The correction happens after that. So I just want to point that out. People think that we get the crash in 2026. I don't think that's the case. I think that happens after 2026 because the stock market will peak after this cycle peaks. Stock markets generally peak after the house prices peak. So that leads us over to MicroStrategy. Just a quick update here as we covered it yesterday, and I'll do it again tomorrow in the next videos. MicroStrategy is still holding out here, $350 odd, but overall has continued to put in lower highs while Bitcoin has put in higher highs, which is pretty similar to what happened last cycle. So still on track here after another slight move to the upside. days to go. Just an interesting one. I'm not living or dying by this. 77 days to go to the estimated end date of this cycle being in mid-August. And that is just an exact day count from the previous cycle. So that was the day count from the February high to the November lower high, which was the Bitcoin all-time high. That took 273 days. So if we count out 271, 273, I think would take you to the weekend or thereabouts. Anyway, you're looking at mid-August. So about 70 to 80 days to go. So that leads us over to Ethereum and the altcoin space. Total 3 market cap. This excludes Bitcoin and ETH. That had been obliterated. And I did a couple of videos recently on what this needs to do in order to get back into a strong position for your altcoin season. So far, none of those things have been met. Closing above 910 billion would be the first case, and then getting above all these previous tops where it's been rejected. You can see that line right there. 940, 940, roughly 950, 950. So $950 odd billion is going to be the real key there for the total crypto market cap, excluding BTC and ETH. Basically, your shitcoin market cap right here, and it hasn't been able to do that yet. Along with others, a couple of days ago, put in a new cycle low. So this is the total crypto market cap, excluding the top 10. So Bitcoin, ETH, stablecoins, that put in a new low, essentially meaning it's going down and the altcoins continue to suffer in that case. But what hasn't been suffering, at least over the last few days, is Ethereum. So this has just been climbing slightly higher day by day. Yesterday was a relatively good day, 2.7%. And then ETH versus BTC also saw another good day here, trying to get back above 2.5%. So that was the previous tops. And then those highs there at 2.6. That's going to be another key level for Ethereum to break above. Same deal goes for $2,750 for ETH. So day by day, we're tracking ETH as it still remains in a relatively strong position, putting in those higher lows, higher highs. And for you guys that are following at home with your GAN rules for a breakout, pay attention here. 1, 2, 3 levels, 3 hits at the same price. We could be going for that 4th time breakout. So it's a pretty good signal there. If you want to learn more about that and learn how to implement it into your trading, TIA Premium is the place to go. Otherwise, keep tracking those 4th time breakouts. Know how and when to use them. It's not an all the time thing, but often it works very, very well. So we'll keep an eye on that. The last time we did this publicly on the channel, we were watching Solana versus USD, and that happened right around here. October 2024, we had 1, 2, 3. We got the 4th time breakout, the retest, and then it flew. So that was another really, really good signal using that 4th time breakout. That's a GAN 4th time breakout. Sometimes people ask, what is GAN? GAN, G-A-N-N. That's who you want to look up. Absolute legendary trader. So Ethereum, they're the price targets that still stand, 2,750 up to 2,900, which are these previous highs. And at the moment, it looks like it wants to at least attempt it. So ETH's been on the run here, looking relatively strong. And something else that's supporting that is this evidence right here from Crowded Market Report, just looking at how crowded the market is. The blue are your long speculators, or large, and that's on the long side in this case. And the red are your commercial speculators. So basically, I guess you could call it smart money and dumb money. Dumb money is blue here, and they were getting long, because it's on the upper side of the middle line here, through the downtrend. They were trying to long Ethereum through this period, and they only managed to get a little win through here, whereas the commercials were going short through this period and then only got wiped out here. But of course, they made their gains on the way down, and then they got to take profits. Therefore, prices have to go up so they can buy out of their short positions. Now we see this blue, large, going short again. Are they going to get wrecked? And we see Ethereum push to the 2,900 level and beyond. That seems to be the case. Almost every time they get absolutely destroyed for the majority of the period, and then maybe make a few gains at the end. Look at this thing, trying to go short Ethereum through this period. That does not look like a great time to be going short Ethereum, but there they go again, trying to do it. So essentially, you want to be on the opposite side to these guys. You're not always going to be right, but most likely the large speculators are almost always wrong, almost always wrong. And finally, the Elliot Wave cycle that Michael has been tracking very closely on his channel. As I said, I'll leave a link to this in the video description. We're still in this wave of 3, wave 3 of 5 of 5. So basically the end wave, but this could be the largest move that we see, which is why we continue to cover Bitcoin, looking at the sentiment and the wind up at this point. If it happens to be the case, then you could see a relatively strong explosive move, because the third wave, which is potentially what we're coming into again in a smaller time frame as well. You can see this third wave right here in the larger wave 3 as well. Those typically are some of the strongest moves. There is wave 3 yet again, and another wave 3, and another wave 3 coming out of the cycle low, mind you. So it's a very significant move going from, at least for BTC, it was sort of like $16,000, $17,000 up to about $20,000, $25,000. So pretty big moves. And that is potentially the wave that we are about to experience. Like, subscribe. I'll see you guys back here at the next video. They're the reasons why I don't think we are at a top, or why the market structure doesn't necessarily look like we're at a final top. Yes, we have confirmed a local top, being from the top down 9 days, but it doesn't seem like we're at a final top for everything that I've explained in this video. And if you want more of that, link in the video description for our free report. This goes along with the stock market and the real estate cycle as well, if you guys are longer term investors and not just here for the shitcoin trades. And I'll see you guys back at the next video. Thanks. Peace out.